Okay, recording this video after close of trade Thursday, the 23rd of July 2020. It's just gone 9:35 p.m. Chicago time. Hope you had a great day's trading. Hope you're doing well. And this is going to be a short-ish video on the Japanese yen. I think we've got a nice little setup lining up for the Japanese yen. Just want to talk you through what I'm seeing on my charts. It's going to show you two sets of charts, the daily chart of the Japanese yen and the tick bar chart of the Japanese yen. This is at JY, which is the continuous contract, day and night of the Japanese yen. So each these bars on a daily chart is a 24-hour session. And then we've got the 7,000 tick bar chart, which is a couple of time frames down from the daily chart. So that kind of gives us a little bit more granularity. Kind of the big setup is on the daily chart, but then you can kind of zero in on the tick bar chart to kind of time your entry and see what's going on a more micro level. So big things happening in the currencies at the moment. We've got the dollar index kind of sinking. We've got things like the Aussie dollar, the euro kind of strength, pretty damn strong. Whether they've reached the top of their range, we don't know. But the Japanese yen really hasn't done very much. So I think potentially we've got the makings of a little bit of a launch out of this channel on the Japanese yen. And so just want to show you what I'm seeing. Two sets of charts side by side. On the right hand side, better sine wave and everything to do with price. On the left hand side, better momentum and better pro-am, and that's everything to do with volume. So on the right hand side, here's better sine wave below the price bars, and it calculates the cyclical activity in 3 different time frames. And the cycles are printed below here, and we use those to calculate support and resistance levels on the price bars themselves. The lowest time frame, these little dotted lines, the intermediate time frames, slightly thicker lines, and then the highest time frames are the very thick lines here. Strength and uptrends and support levels are in red, and weakness and downtrends and resistance levels are in white. And then left-hand side, we've got better momentum here, which is a volume-based momentum indicator. And on the price bars themselves, we have professional and amateur bars painted using better pro-am, which uses the average trade size to identify the professional and amateur activity. Blue bars for professionals, yellow bars for amateurs. So what's got me interested in this chart right now is this little setup here. Big things happen at triples. You either get big breakouts or big breakdowns. So we've got a triple support going on here. You can see SR 1, 2, and 3. So that's the support resistance in the lowest and the intermediate and the highest time frame. 1, 2, 3 is the low, intermediate, and high time frames. And you can see they are pretty close together actually. 93, 94 here with the highest time frame. But on that bar there, that previous bar, we've got 2 time frames going off at the same time. You can see SR1, SR2, identical levels, 9, 3, 8, 3 there. I love it when you've got levels, particularly the lowest and intermediate time frame. Breaks of those together are really good, and when they're close together, it leads to kind of strong trending moves. Strong trending moves because there's nothing in the way. Once you've broken a resistance level into an uptrend, the next place you're going to find resistance is after a pullback to end of trend sequence. Similarly, on the downside, breaks of support levels, the next place you're going to find resistance is at a pullback to end of trend sequence. So there's nothing in the way to stop us once we're breaking through those resistance levels, and it's out of this channel, so it's kind of an interesting place. So on this kind of high time frame on the daily chart, that break is looking interesting, and then if we break above resistance on this highest time frame out of this channel, which we've been boxed into for 3 or 4 months, 4 or 5 months, here kind of the 94.50 type level here, breaking out of that would be really significant. I also talk about big ranging kind of blue professional bars. Did you hear that in the background? That's a chicken, a rooster going off. We're still in Kauai here. There's wild roosters everywhere. And not many people around. A lot of wildlife here at the moment. Anyway, that was a rooster if you heard that in the background. I'm not killing young children. Anyway, so blue professional bars here from the bottom of this move to the top of this move here. Bang, bang, bang the whole way. And whenever we get kind kind of spikes like this with blue professional bars, we go and test each side of the channel. We go test the lows of this channel, and we've done that a couple of times, once here, and then the market just gets drawn to testing the high of the channel, kind of up here at 99. So, I mean, that would be a hell of a move on the Japanese yen all the way up here. This was, the last move that we had was the sell-off in the equities market, which drove a repatriation of funds to Japanese yen. So that's the yen carry trade being reversed. So as soon as there's weakness in the equities markets, it causes margin loans, and people have to repatriate funds back into Japan, which causes a spike in the Japanese yen. Little bit similar patterns in the euro that we see at these points when the market is kind of super stressed. But that's why we got that huge spike in the market back in February, March. It was repatriation of funds because the equities markets was falling off. If we have a breakout in the Japanese yen, it could be interesting because it would signal a similar thing happening. The equities market might be starting to top out, might be starting to reverse and go down, and we might get a similar pattern. I think we're a little early in terms of what the equities market is doing. Yeah, we had a pretty nasty down day today. We didn't close the gap with today's trade. But we've got a little bit of time to run on those cyclical patterns. So I think we could still go up and test back into those highs. So I don't think this is necessarily the jump that's going to lead to one of these massive moves again up to 99. But we got something going on here. So that's the daily chart. Tick bar chart. Exactly the same indicators on the charts. We just back it down to a 7,000 tick bar charts. Everybody knows why I like tick charts. They're fantastic, much better than hourly, 4-hourly bars, anything like that. Principally because with a tick bar chart, you can really narrow in on the average trade size, and better pro-am becomes far more accurate on a tick bar chart than a daily chart or an hourly or a minute chart and so on. So on this chart, you can see that we had this nasty spike down, the last one that we had down here, and then it just got forced right back up to the top here. We've come back in to test down to the lows. I mean, we hardly got close at all, but we had a Rambo pattern down here. Rambo, remember, stands for a potential reversal of an amateur breakout or breakdown. And it's where the amateurs are kind of leading the move. We have one here, the market backs away from it. We have one here, the market backs away from it. When the amateurs are leading the charge, it's a little bit suspect. So when we get reversals, when we get the opposite side of those bars kind of broken, it's kind of a good entry point, suspect point. But we're always looking to follow the pros and see what the professionals are doing. And right now, the professionals came in a few bars ago, a couple of days ago here, bang, bang, bought it at 93.3. Up here, we came back, tested that area, and it held, and we've rallied back above here. So that's good. So that's flipped better pro-am into an uptrend mode. So it's kind of covering us here, and we had a big reading on better momentum here, 9.9. I'm not worried about that in terms of an exhaustion pattern. These kind of patterns did exhaust, and we kind of came back down, exhausted and came back down. But we're waiting for the break. So this could be, a big read, which is getting the move going. Remembering that we've been in this channel for months and months, so we're looking for some kind of move, and that could have been everybody just jumping on board this thing in order to get on board before it breaks out of the channel. Better sine wave. We've got support on the highest time frame here. Got crushed earlier on, but we've held. That whole piece has been kind of going on, and we've been trying to break and break. Last time we had a little bit of weakness, but on this low time frame, we've broken above an intermediate time frame resistance, and we're into an uptrend again on this chart. So because of those two breaks, we got strength and potential uptrend on better sine wave, and we've got strength and potential uptrend on better pro-am. Those two things are signaling together, so that's why the background with the combo indicator is showing red here, dark red, because the two indicators are in sync. So we want to be kind of trading in the direction of those kind of combo trend signals, and when they start to make sense in terms of the daily chart as well, that's when it all gets very interesting. So let us see, break into 94s would be very nice. Then above 94.50 would be great. That would give us some real reason to get out of this channel and kind of get this thing going. I don't know if we need the equities market to sell off at the same time as this kind of move kind of happens kind of simultaneously. But this could be the little jump that we need into an uptrend. Remember, big things happen at triples. And here we've got a triple resistance going on, and we're seemingly breaking above two of those levels, and potentially the third in the next few days. So let's see where this thing goes. I think it's looking interesting.